When it comes to investing in bonds, many people believe they can outsmart the market, chase the highest yield, or time the perfect entry. But in reality, bonds aren't about being bold or heroic. They're about discipline, patience, and smart risk management. This video will help you understand why humility, not heroism, wins in the bond market, and how to protect your capital while earning steady returns that truly matter over time. 10. The myth of the bond hero. Many investors treat bonds like a stage for bravery, taking big bets on long maturities or risky issuers just to look smart or bold. But the bond market doesn't reward heroics. It rewards patience, prudence, and balance. When you chase yield without understanding credit quality or duration risk, you expose yourself to losses that can erase years of steady gains. The goal with bonds is consistency, not conquest. Think like a guardian of wealth, not a gambler seeking thrills. Smart investors focus on preservation before performance because true success in bonds is built quietly, not dramatically. 9. Risk is not always reward. In equities, high risk sometimes leads to high reward. In bonds, that relationship is weaker. Chasing the highest yield often means lending to entities with questionable stability. One default can undo years of income. Investors who ignore credit risk or interest rate shifts end up learning that the extra yield was never worth the stress. Bonds are for those who value safety and predictability over spectacle. Don't be seduced by the promise of fast gains. Remember, bonds serve as the anchor in your portfolio, not the sails that pull you toward risk. 8. Duration. Dangers. Many investors misunderstand duration, the measure of a bond's sensitivity to interest rates. When rates rise, long-duration bonds fall hard. Trying to be a hero by locking in long-term yields can backfire fast when inflation or rate hikes arrive. The bond market is quiet but brutal for those who misjudge time. Wise investors ladder maturities, diversify across durations, and stay nimble. Being cautious with duration isn't weakness, it's wisdom. The point isn't to predict the future, but to stay resilient no matter which way rates move. 7. The illusion of predictability. People often assume bonds are simple, steady interest, predictable returns, no surprises. But this illusion can be dangerous. Even government bonds can fluctuate sharply when macro conditions shift. Believing you can perfectly time rate, cycles, or economic turns is another form of heroism that rarely pays off. The market humbles those who think they're smarter than the data. A wise investor uses bonds as insurance, not prophecy. You can't predict the wind, but you can trim your sails, diversify, hedge, and hold quality over excitement. 6. Yield chasing can burn. You chase in high yields. In bonds is like touching fire. It seems attractive, but it burns deep. Junk bonds or exotic emerging market debt may look tempting, but they carry heavy risks. A few percentage points of extra return can cost you massive principal losses if defaults rise or liquidity dries up. Smart investors remember that higher yield always signals higher risk. Bonds are not about chasing what looks shiny. They're about securing what's stable. Play it safe, stay quality-focused, and let time do the heavy lifting. 5. The power of patience. Bond investing rewards those who wait. Unlike stocks that thrive on volatility, bonds compound quietly. Every coupon payment, every reinvestment adds layers to your long-term security. Impatience selling early or reacting to headlines erodes that compounding power. Patience allows you to benefit from reinvested interest and capital stability. Let your bonds mature, let the system work, and remember, steady compounding beats short-term brilliance. Heroes act fast. Legends grow slow. 4. Diversification is your shield. Putting all your money into one type of bond or issuer is asking for trouble. The quiet secret of great bond investors is diversification across sectors, maturities, and geographies. Each bond acts like a pillar in your portfolio's foundation. If one weakens, others hold strong. This shield of diversification keeps you steady when markets shake. Never believe you can pick the single, perfect bond the market punishes overconfidence. Spread your risk, and your returns will thank you in the long run. 3. Inflation, the silent enemy. Inflation quietly erodes your bond's real return, eating away at your purchasing power. Many investors overlook this, thinking fixed income means fixed value. It doesn't. A true bond strategist watches inflation trends, prefers inflation-protected securities when needed, and never ignores real yield. Ignoring inflation is another form of heroism, pretending it won't strike. But it always does. The wise investor plans for erosion before it begins, ensuring that even after inflation, their returns still protect their future. 2. The importance of discipline. Discipline is the cornerstone of every successful bond investor. It means following your strategy, not your emotions. When markets move, discipline keeps you calm. When yields tempt you, discipline reminds you of your goals. Bonds don't need adrenaline. They need structure. Create an allocation. Set duration targets. Review credit quality and stick to the plan. Every time you act out of fear or greed, you lose the quiet advantage that makes bonds special. Discipline turns modest yields into enduring wealth. 1. Humility wins in the bond market. At the end of the day, humility beats heroism. The bond market has humbled economists, billionaires, and central banks alike. It's vast, complex, and often unpredictable. A humble investor accepts that they can't control rates or timing, only their risk exposure. By embracing humility, you protect yourself from ego-driven mistakes. You focus on steady returns, safety, and long-term growth. The real heroes in bonds are those who never try to be one. They let discipline, patience, and prudence win quietly over time. So remember, in the bond market, the goal isn't to stand out, it's to stand strong. The quiet investors who protect their capital and grow it slowly will always outperform the ones chasing glory. If you found value in this breakdown, make sure to like this video, subscribe for more financial wisdom, and hit the bell so you never miss what's next. Let's keep building smarter, safer portfolios, one disciplined decision at a time.